All right, JPMorgan's turning bullish on Simon Property Group, upgrading that stock today to overweight with a $198 price target. We've made it our call of the day. It's 171. Josh, I'll give this to you. You talk about REITs all the time. Yeah. So much for retail being dead because of Amazon, and then you got this rising rate equation to factor into REITs as well.
Nah, you know what? I don't like this call. I don't like the. I don't like a lot about what's going on. Simon Property Group's a very high quality company. I don't think anyone would disagree with that. I think
tied to malls, right?
Tied to malls, tied to retail shopping. You could put as many movie theaters and restaurants as you want in these malls. It's not going to change the fact that foot traffic doesn't automatically turn into sales at cash registers. You now have mall owners that are literally operating stores. Aeropostale went into bankruptcy, and a joint group of mall operators actually took on the brand, and they're producing clothing so as not to have an empty hole in 400 malls around the country. I much prefer Store Capital to this. It's a smaller company, STOR.
Right, that's the one you've actually talked about in the past.
I'm long. It's a triple net lease. It's not malls. It's a single building with the tenant in there, and it's not retail. It's hairdressers. It's health clubs. It's things that cannot be disrupted by the internet or Amazon. And Warren Buffett's the largest shareholder, and this is his only REIT. In the Berkshire portfolio. This is the one, right. Not Simon Property.
All right, good
Group.
stuff. I'm glad you went there.
I just think it's the one though that's defied the mall is dying kind of rhetoric that's out there. But I agree with Josh. With retail bankruptcy, rising rates, declining rents, it's tough for me to see how you buy this.
It's not a narrative. It's a reality. Actually, occupancies in American malls are back at 2011 levels. It's not empty stores in malls. It's not good.
But they have defied it. That stock specifically.
They've defied it by making up for it with entertainment, which is fine. But look, it's like you could teach someone basketball. You can coach somebody. You can't teach height. Okay, so this is a challenge.
You don't have to tell me that one.
So you have a great management, great properties. I go to Roosevelt Field Mall. Shout out to Roosevelt Field. It's just not where I want to be invested for the next 10 years.
Scotty knows I have a 5'10" Division I basketball player. Couldn't teach him height.
You couldn't coach him up to 6 feet.
I couldn't. I tried.
Do you own any REITs?
We have some REITs. We're underweight REITs, but I will say we also look at private real estate, and publicly traded REITs are more attractively valued than private real estate.
Wild, right?
Yes, but we are underweight REITs. One of our names that we really like within the space, though, is American Tower. So this a completely different theme than Simon, but should really benefit from the rollout of 5G globally. So we think that's a great.
One thing I want to add to this: if you're worried about inflation, the feature that makes REITs a better inflation hedge than gold is the fact that they've got, some of them, Store Capital in particular, built-in escalators. So whatever is being paid in rent this year goes higher next year, higher. So if you think costs are on the rise, CPI is going up, et cetera, and you're worried about that, a lot of these companies offer a business model that specifically is designed to hedge that risk. So you look at things like adjusted funds from operations, but you also look at the escalators. And I think when you look at something like Store, there's a lot to like.
All right.